Hey, welcome. This is Trader Travis, and I welcome you to this month's training video. Now, if you watched last month's training video, then you know I went over a brief overview of the game plan for 2019. Now, what I want to do is show you, how I set up my first initial trades here, and then also give some clarification because I probably threw some people for a loop talking about different strategies. So my apologies, but I've changed my Excel around so we can keep the main thing, and the main thing is the MarketClub options blueprint. This is the core strategy you signed up for. And this is the core strategy you have handouts and everything else for. We've simplified the process for you. Now, down here, the Buffett Strategy Profit Accelerator, I put it down here so you know these are limited time bonus strategies. Thus, I won't create handouts and things like that because we're always changing up what the bonuses are. Last year, the bonus was, hey, I had to insure my mom's TSP retirement account, and I showed everybody, hey, here's how you buy stock insurance. And so the bonuses are the reward people, one, for joining this program. These are unadvertised bonuses you did not know you were getting. But that's how awesome MarketClub is. They're always adding new things in, right? And so this is to reward you for joining. Hey, you get something you didn't know you were getting. Two is rewarding people who show up and watch these videos every single month, right? So I'm going to go through and detail everything I'm doing in these bonus videos. And then for those who show up and stay tuned, you're going to benefit from it. And then next year, I may have a different bonus strategy or something else to teach you. And so we're always rotating and giving you more value each and every year. So I do apologize, but I'm not going to have any handouts or any things like here. You just have to show up, stay engaged in the community, and you will benefit for it. All right, so let's start here with the primary focus of this program, and that's the MarketClub Options Blueprint. We are still waiting for the full blueprint to be satisfied. If we come here and you look at the top option scan, I'm just going to open this up in a new tab here. We're waiting for the red monthly trade triangle. So for the full blueprint that gives you the highest chance of success, we are waiting for a green monthly trade triangle. You can find those right here, strategy handout. You can see explanations of what I mean by that in this section right here. Now, I also teach something called the 10-minute trading strategy. And that is what you see here. Still part of the MarketClub options blueprint, but it allows you to sneak in trades early. I do not advise you to make this your core strategy because you will wind up losing money overall. Eventually, it catches up with you. But when I'm impatient and I'm ready and I think the market's about to turn green, I may test the waters with a few trades with the 10-minute strategy, and I'll get in a few. So I'm in early. But, over the years, I found that if I do that enough and I keep ignoring the trade triangles and I'm impatient and I don't wait for the green monthly, let's come here. If I don't wait for the green monthly, I found that over time, I eventually lose money overall. I may have some winning trades, but it's kind of a yo-yo performance. So you will have the highest chance of success waiting for the full blueprint to be satisfied. But every now and then, I will test the waters with a couple of 10-minute strategies, and that's what you see right here. For example, let's pull up Starbucks. Starbucks is one of the ones that is doing okay, is treating me well. So let's see if I can pull up Starbucks chart real quick. Okay, so I have a 2-year chart of Starbucks put up. It's been kind of volatile all over the place. This is one I'm emotionally biased to because my family goes to Starbucks. So this is something I always have to be mindful of, to not get emotionally tied to a stock. Some people are emotionally tied to Apple Computer. So most people have one stock they're emotionally tied to. Starbucks happens to be one of mine. And so every time I get into a Starbucks trade, I always have to be mindful of that. But I use the trade triangles to back me up. And so that way, I don't get in on emotions and things like that, or what I think the stock will do. Oh, I think the stock is going to go up. No, the stock market doesn't care what I think. So I'm going to go off the trade triangles here. And so we see a monthly trade triangle back here. Let's put on a 1-year chart. We see a monthly trade triangle back here. And then we did not get another weekly until 1/15, so January 15th. So at that point, the 10-minute trading strategy was satisfied. And so I wind up getting into Starbucks on 1/17, and I risk about $700, which satisfies the 210 formula here. Every single trade, this is a recap, it's in the training, but every single trade I make, I want it to be my max loss on that individual trade to be 1 to 2% of my entire account. And then the 10 of the 210 is, I want no more than 10% of my account out in open trade risk. And so far, all of these trades satisfies that, the growth strategies. Okay. Now, I did something different this year. This is a bonus approach or another approach, not really a bonus approach. You get to see another approach this year. But before I get to that, so pretty much everything else here, the other 10-minute strategies, the speculative gamble was just that. I was just gambling. No explanation necessary. Gambling, and I already regret it. But the other ones, just Starbucks right here and PayPal are doing so far. But anyway, the other approach I was talking about was because of 2018, we had two major market corrections, and that kind of rattled me, meaning that the market is in a 10-year bull market. I know it's going to fall eventually. All this volatility. I sat on the sidelines a lot for the MarketClub options blueprint, and it really annoyed me. Second thing annoyed me was watching profitable trades. As soon as, I made money in the beginning of January, gave some of it back during the correction, took most of this time right here to recoup what I had lost, only to watch the market pretty much take away my gains. I was like, I'm sick of this yo-yo stuff. So I was like, I don't trust the market anymore. This is not the market goes up the majority of the year anymore. We have a lot of volatility. So I'm going to tailor my approach. And so this different approach you see is I'm taking kind of a balanced risk approach. All right. I invested about $700 for Starbucks. And, there are two ways to trade a volatile market. You can get in and get out pretty quickly. Right. That's used to be my approach. But now I have young kids. I'm teaching. I have a busy life. I can't be at my computer all the time every single day like I used to. So now I was like, you know what? Let me get in, but buy myself more time. And so you will find these trades give me about a year out. So I have a year for Starbucks to go up in price and to make money. But if it does not, if we have another situation like 2018 where it goes up for a little bit and then it crashes 20-30%, I say, I don't want to watch my gains go down anymore. And so I'm taking a balanced risk approach, and you will see that I bought insurance for this, right? Now, this insurance is not a year out. It's about 2 to 3 years out. So I'm giving myself a year to make money, but if sometime after that Starbucks falls, or any time after I've opened the trade it falls, I have insurance in place. Now, I didn't risk as much. I only risked a little bit, but this will offset, anything I'm losing here. And so that's the approach I'm taking this year, just because, I'm not really trustful of the market anymore. Now, let's come back here to something I said before in the beginning. This is MarketClub's primary strategy, the growth strategy. Now, why is that? It's because when I originally created this program, I wanted to show people how to grow smaller accounts, how to take small accounts and then use conservative option strategies to do that. Now, I'm coming back here to about 2015 because this was one of the highest performances I have had, and it was purely MarketClub options, nothing else, no bonus strategies, anything else. So I'm using this as an example to show you. Now, I don't necessarily recommend you start with $5,000. I say you should start with at least 10, but I do know people who start with 5. They continue adding money to the account and things like that, and then they eventually get it bigger. I don't think you should just purely trade a $5,000 account. I do think you should get out of debt, save money. Same proven wealth building blueprint most everybody else has followed, as far as reducing down or getting out of your consumer debt, just having a high savings rate. There is no wealth without savings. I don't care how much money you make. If you don't learn how to save it, you won't have it. Okay, end of rant, end of spiel. Now, going back here, right? So I started with $5,000. I ended the year, the entire account ended up 39%. That was the growth. The entire growth of the account was 39%, pure trading profits. But you see here, this extra column, 211%. This is why I teach MarketClub options, because out of the 5,000, I only invested 932. Again, I've always said it in other videos, generally 80 to 90% of my money will sit in cash. It's just comforting. That's just the way I prefer to invest, right? So 932 of the 5,000, you will see that I only invested, and I didn't invest it all at once. I invested it periodically, but I only invested about 20% of my total account. That's it. I didn't invest anything else because once I invested that money, I had some profit. I kept reinvesting my profits. That's all I was doing, was reinvesting my profits. And so you will see I had a 211% gain on the money I had invested. So that was my, I guess what you would call risk adjusted return. The return on the risk I had a risk of losing 900. So my risk adjusted return was 211%. My overall return though was 39%, because again, I had a $5,000 account. I just didn't invest $5,000. So I don't care which percent you look at, the 39 or 211, that's pretty flipping awesome, right? I don't think the market did that in 2015. I don't know, but I'm pretty sure it didn't. Two, that's a pretty decent return by keeping, 80% of your money in cash, right? You can't do that with buy and hold. This is why I teach MarketClub options. This is why MarketClub options is and will always be the primary strategy, because I want people to learn how to do this versus the whole buy and hold where you have 100% of your money at risk and 40 or 50% of it goes out the window during a market crash, right? So that is why we focus on MarketClub options. That's why I changed the spreadsheet around, so you know that this is our primary strategy, because I never want you to lose sight of the conservative ways you can grow an account. Now, with that being said, I have heard through the grapevine, we have some stock traders amongst us. And if you think about it, that's what MarketClub has, more stock traders than option traders. I heard people have large accounts. I heard people were buying stocks. And I was like, as a coach, I have a weak spot. When I know people are doing things that will hurt them, my weak spot is I always want to teach you a conservative way. And so translation, I wanted to teach those stock traders how to make stock trading safe, right? I'm an options coach. If you're going to be dead set on buying stocks, that's fine. I have nothing against that. Let me show you a safer approach using options. Let me show you how to reduce the risk of investing in stocks with options. And that's why we have the Buffett strategy, profit accelerator, things like that. Just these limited time bonus strategies. Again, I don't even know if I'll teach this next year, but this year I want to focus on it because we're in a 10-year bull market. I think the market will crash. So I'm intentionally trying to buy a stock at a market top to show you this is the options approach, where you already know the buy and hold approach. Buy high, sell low, right? You buy at the top. You always seem to buy at the wrong time, right? At least that was my experience. And then as soon as I buy, the stock crashes. That's buy and hold. Well, I'm like, okay, let me do that. But now let me show you what an option trader, the power of options trading and how you can reduce the risk of investing in stocks. That is why I'm showing you that this year. So again, this is a bonus strategy. I won't, I'll walk you through everything I'm doing, but we won't put a lot of focus on it because we want to keep the main thing, and that's the MarketClub options blueprint. So I've already walked you through the MarketClub options blueprint. I've showed you why I got into Starbucks, what signal I use, and also the balanced risk approach I'm taking this year by buying insurance for my individual trades. I don't know if I'll do that for every trade. Most likely I will. But if I don't, I will just strictly follow the blueprint. I could wait to buy the insurance. There was absolutely no reason whatsoever for me to buy this insurance, right? MarketClub is all green. No reason whatsoever for me to buy this insurance. I just did it for peace of mind. That's all. Again, 2018 rattled me. I didn't like that. It annoyed me. So I just bought it right away for peace of mind. But if you want to save some money and be conservative, you could wait until you get a MarketClub trade triangle in the opposite direction to buy insurance. So that's a choice you have, to each his own. Now, Buffett strategy, right? Buffett strategy is simply just buying stock. That's all. We're just getting paid to buy stocks, and we're using options to do that. Not only are we using options to get paid to buy stocks, we're going to use options to ensure that. Because if you've gone through the basics of options, you understand that options have rights and obligations. The right of a put option is it gives you the right to sell a stock at a set price. So personally, I think every stock trader should have options, should have some kind of insurance in place. That's just my personal belief. So I'm showing you that with DIA. I don't believe in buying individual stocks. They're just too volatile and too risky for me. I do believe in buying ETFs or exchange traded funds. So I chose DIA, right? I use options. I got paid to buy a stock. I own 100 shares. No big deal, right? Just regular stock ownership like everything else. But here I'm saying, okay, one, I'm insuring it with options. A 280 put is a protective put that gives me the right to sell this at a higher price. So again, I'm showing stock traders, here's my conservative approach. This is, if I was a stock trader, here's what I would do. I would buy the stock, but I'd insure with options. Like all insurance, it has a cost, right? I don't like paying that cost out my pocket. So guess what? I'll use this beautiful thing called options again, and I'm using options to kind of recoup my insurance costs. And that's where the profit accelerator comes into play. So now I can show you how I set up DIA. This is the approach I will take moving forward the rest of the year. So if I just show it to you now, you'll get it now. And then as I do it throughout the year, you'll understand what I'm doing. Again, rewarding the people who show up and watch these videos. And of course, the important stuff I'll repeat over and over again. So to get into these 100 stock positions, I use options, right? You buy a put option that gives you the right to sell a stock at a set price. But if you sell a put, it's reversed. If you sell a put, it obligates you to buy a stock at a set price if the contract is exercised. So for example, if I was to sell this 251 put right here, I'm selling insurance to someone else. I'm saying, hey, I'm willing to buy your stock from you. You know, at this price point, they're going to pay me $325. If the contract is exercised, well, the cash is mine to keep regardless. But if the contract is exercised, I have to come in and buy stock, right? 100 shares at 251. That's what already happened here. That's why I own these shares right here. You can follow the income trail via the spreadsheet. So that's my core position, a stock trader, showing MarketClub stock traders how do you use options to lower the risk of investing. I already got a $300 rebate. Regular stock and traders can't do that, right? You're already going to buy the stock, right? You might as well get paid. You might as well earn some extra income. So that's another additional benefit of options for stock traders. Right now, okay, let's go ahead and lower the risk even more by insuring it, right? I bought my own insurance here. I told you I don't like to pay insurance. So what I do now is what I call the profit accelerator. Is a riskier stance. I'm using margin in my account. I'm not going to trade on borrowed money, but I'm going to come in here. I'm going to use MarketClub. Let's see, do I have it pulled up? No, I don't have DIA pulled up. But let's say this is S&P 500. But if this was DIA, I'm just looking at MarketClub, looking at the trade triangles. And since these are short-term trades, I'm doing weekly options. I'm just looking at the daily, seeing if I had to go. And this is a green daily. So it says, hey, in the next few days, S&P 500 may go up in price. So I did the same thing with DIA. I used MarketClub. MarketClub gave me a signal. And I went in and I just sold an option that expired a week out. I sold another put option here. These shares I don't want to own though. If the contract is exercised, I don't want to own those shares. So if I get a sign, I'll just immediately sell the shares back, right? All I want is to try to scoop up $100 here, $100 there, you know, over the span of a year or two, and I will eventually recoup the cost of my insurance. So that's what I'm doing there. And you can see a couple of positions I already opened right here on the profit accelerator. Let's go right here. I call it high risk profit accelerator because again, I don't want to own those shares. I technically don't have the money to cover those shares. The broker will allow me to borrow money. So when I borrow money, to be about a day. So I place another trade here. So this $200 right here helps recoup the cost of my insurance, right? DIA kept going back up. You can see here, I put in an automatic order to buy it back at roughly 80% of the profit, and it did that. So, you know, I turned around and I immediately sold another one here on 130, bringing in another 266. Now, I don't expect to keep always making money and keep these trades work out, but that's where MarketClub comes into play. The moment I get a red daily or something like that, I'm out of that trade because, again, this is trading. I'm trading. I'm an option trader. I don't want to own those stock traders. I don't want to own those stock shares. So I'm using MarketClub to come in here and make some short-term trades. And again, the sole purpose of these individual trades right here is just to recoup my insurance costs. 200 here, 200 there, 100 here, 100 there. I'm taking my time, and I anticipate, you know, within a year, I would recoup the cost of my insurance of the stock. And that's down here. That's about right here, the 280. So I have overall about $9,000 to recoup, $9,400. So let's do that. $9,400. Let's say I'm able to make $500 a month here. That's going to take me about 18 months to recoup the cost of my insurance. That's fine because the insurance is free after that. Everybody else had to pay full price for that insurance because we know the Market Club Options Blueprint, we know options, we can recoup our insurance in 18 months. And you think that's a long time, but look, this is a 2-year insurance policy. So that rest of the time, I can keep doing the same thing, making even more money. Not only that, I have complete peace of mind that I will never lose money on this position because, hey, I'm guaranteed to sell at 280. Now, I say guaranteed to never lose money. Let me rephrase that. Once I recoup my insurance costs, I'm guaranteed never to lose money. Right now, as it stands, the most I will lose is pretty much what I have tied up in insurance. All right, so let's show you that numbers here. What did I buy the stock at? And then I'll end because I thought this would be a quick 5-minute video, but hey, Trader Travis likes to talk. I bought the stock at 238, it looks like. Yep, 238. All right, I have protection at 280. Yep, I have protection at 280. So let's show you the calculations there. I actually have to come back to the Excel so you can see the max I can lose. Worst case scenario, 280. I can sell it for 280 based on my insurance contract. I bought the stock at 238. So you think, wow, that's a $42 profit. No, not so quickly there. Remember, it cost me $47 though to buy that insurance. So we have to add that cost, or excuse me, we have to subtract that cost out, $47.25. So I'm still in the hole $5.25. But this is worst case scenario. Worst case scenario here, because I use options, I can buy insurance. Worst case scenario is I only can lose $525. This again goes back to what I said. I wanted to show stock traders how to make buying stocks safe. How would you feel if you can buy a stock and you know that no matter what happens in the market, even if we go to a bear market like tomorrow, the most you can lose is $525. This gives me peace of mind. I don't have to freak out now if the market goes back through another correction. But, I'm also not freaking out because I know this figure is not entirely accurate because I've already started recouping that cost here with the profit accelerator. 210 here, 266. So now let's come back here. 525 plus this one, it wasn't exactly 210, but let's just do 210. One trade, recoup my insurance at 315. And then I'm doing another one. I'm doing another one. I'm doing another one. So honestly, I'm not taking 18 months to recoup my insurance costs. I'm doing it in a few months. Now that, my friend, is beautiful. That's all I have for you. You take care. Hope this video has added some value to your life. Open your eyes to what's possible using options. And if you have any questions, just ask me in the memories area up underneath this video. You take care. Talk to you in next month's training video. Bye-bye.